Okay, and we're live. So good morning, everyone, and welcome to another episode of the Crypto Hour. First of all, a little bit of housekeeping. I'm going to be away for the next 2 weeks, so there won't be a Crypto Hours. So that will start again in 3 weeks' time. Okay, so not next Friday, not the one after. Okay. So let's get started. And today, we keep, over the past few months, we kept talking about the economic situation and the especially relating to inflation and interest rates. Okay, so today I wanted to talk a little bit about the what is the equilibrium rate and what it means. So that's the rate at which the economy can grow at a reasonable level, which normally is set. I mean, this is a completely arbitrary rate, okay? So this will be the rate that the central banks, at least we'll talk about the US in particular today, the central bank will need to set for the economy to grow at a pace of 1.75% growth every year. Okay, but let's have a look first at, let me share my screen. Okay, can you see my screen? Can you see the economic calendar? Yeah, okay, good. All right, so obviously the US central bank has started tightening interest rates from last year, and we've entered into this cycle of tightening from about June of 2022. Generally, when they get into this increase kind of rates of interest, it's a recession or a marked slowdown of the economy follows between 12 to 24 months. We are now 14 months into this process, and we are starting, obviously, we have carried on seeing the results of this tightening. In particular, today, as you can see here from the economic calendar, we have the non-farm employment change that will be released at about 8:30 a.m. US time, 1:30 here in London. And this is one of the most important statistics that both the government but also the markets look at. So if I click on here, you see the history. So we see from June, when we had the peak, we had this, this just shows how many job openings there are that are not connected to farming. Okay, as you can see, so it can indicate the strength of the job market in the US. So you can see the job market has been weakening, and not only has the numbers gone down, but also they're gone below expectation for July and August. And if this trend is to continue, as you can see here in September, so 187 was last month. This month is expected to show a result of about 169. Okay, so generally the result that would be announced and the amount that the markets will react to it will be, the reaction will be stronger when the results differs from what is expected. So if it is higher than 169, will be a positive reaction. If it is lower than 169, it will be a negative reaction. But so in terms of trend, we're seeing the kind of the job market that has been kind of deteriorating in terms of jobs opening. The other thing is the services. So that's the last announcement was last week on Wednesday, and you can see here a similar thing. So from May, when we had the high, then the numbers are kept reducing and going lower. And now we have an expectation. So sorry, the latest announcement in last week was from 51, which is just shows just a little bit of growth, but below 50 will be a decline, and above 50 is an increase. But as you can see, the numbers have now carried on going down. So those are the kind of two of the largest indicators that we can use to judge the strength of the American economy, and both show a trend of deteriorating, getting worse and worse numbers. Now, what we had in the past few days, we can see here we have the Jackson Hole Symposium, which is a meeting here, which is a meeting of central bankers, finance ministers, academics, and other financial market participants from all around the world. Okay, these meetings are closed to the press, but generally there are kind of people keep popping out and talking to the press throughout the day. But it generally is a meeting that shows where the policies across the world are discussed and agreed. Now, Jerome Powell, the Fed chair, has come out with kind of press releases, which are always, I just remember that's one of the things a lot of people listen to the point where they actually have AI, artificial intelligence, examining the exact words that Jerome Powell uses to determine his future policy. Okay, and the message that came out of Jackson was very, very hawkish, very aggressive in terms of how they are tackling inflation. And what it says here, as you can see, 2 means 2. It means that their target is 2%, and they are sticking to it for inflation. At the moment, we are in the 3% in a 3% range, but they're still saying, well, even if we had inflation coming down and non-farm payrolls on a declining trend, services PMI consistent with very weak growth, they still say, no, we're going to keep hard at it until we reach our target of 2% inflation. Now, the one thing that he hasn't been able to tell us is what is the target interest rates that will bring the results that they want. So they will bring inflation within 2%, and at the same time, growth back at above 1%, between 1 and 2% at least. Possibly, the target is 2% or higher. So he has admitted himself that he's not quite sure what this is called, the R, which is the equilibrium rate is. Okay, but let's go and have a look at what this means and kind of like historical records of it as well. So this is, again, by the way, was a very light week in terms of economic announcements this week, with just one of the things that moved the market was kind of like unexpected, is showing a lot lower consumer confidence. So these things, actually, this situation is starting to come through to consumers. Okay, and that is a problem, because of that informs their, if they have lower confidence in the economy and their situation, they're going to spend less. Okay, and that reflects in in then the economics number going forward. Okay, so today we have both the non-farm employment change, and then we got the manufacturing survey as well. But mainly this is the one that everybody waits for, and probably from the point of view of markets is the most important announcement of the month. Okay, let's go now on talking about the okay. Now the estimates for and this is, again, it's a theoretical measure. Okay, so there are no hard facts and numbers about this, but the estimate for the US equilibrium real rate is now kept going down from, as you can see, from the 80s and the 90s and throughout the 2000s and so on, kept going down from levels above 3% to where it is now at pretty much at 0.5%. Okay, now, why is this important? Just remember that growth can come come from two things. One is productivity, and the other two is productivity of labor and productivity of capital. Okay, productivity of labor, it can be the function of two things. One of these, how many people are working. So the more people, the more workers we attract, obviously the bigger the productivity of a country. At the same time, so that the number of people that are working must be multiplied by the efficiency of the work. So how much work does every single worker manage to get through? Okay, now trends in all Western countries have shown that the demographics are not good. So in the sense that people are getting older, so the working population as a percentage of the total population is getting smaller, and at the same time we had productivity that has been stagnant, really, with no great improvements in the output of the workers. So how comes that we've seen kind of like growth for so many years? Really, if our experience is that this is going down, how comes that things are kept improving from the point of view of results? The companies and stock returns, stock market returns, and so on. Because the other part of the equation is that the productivity of capital, again, is a factor of both how much capital is employed and how much is it leveraged. Okay, so what we've been basically feeding the growth with is being debt. Okay, so leverage. Just imagine, so to make you understand how this affects everything, is because when you start a business, okay, you started obviously because you think that employing a certain amount of capital, you can get, through your business, you can get a better return than simply putting the money in the bank. Okay, so, and if you think that your return is quite good, you can afford borrow to finance your business because the return that you get is more than what you pay in interest rates. Okay, now in deteriorating economic circumstances where the growth is simply not there, this equation doesn't work anymore. So what happens in countries that there are problems in terms of growth is that then companies and people start deleveraging, so like kind of like paying back the loans, and this is what's happening in China right now, for example. Okay, so this shows you that this is the statistic by the Bank of England, is that traditional method of calculating this equilibrium rate. As you can see, this equilibrium rate over the past 50 years are kept going down to lower and lower levels, because if the demographics are not improving, actually are decreasing, demographic and productivity, it means that the capital must be cheaper and cheaper to sustain growth. Okay, so as we can see, the levels have gone from 2.5% peaking at almost at 2.75% in the 70s, and gradually going down to to just where we are now, which is above 0.5% real growth, real rate of equilibrium. Now, there's one thing though that the traditional methods don't look at, which is private debt. Now, can you see now in the last decade, the country that started paying back the debt, we and the countries we had negative rates, for example, like Japan, like the United States, United Kingdom, many of the European countries like Italy, Greece, Spain, so you can see that in what's been happening in the last 10 years is that many of these countries have actually paid back a part of the private sector debt as percentage of the GDP, and this is important to understand, because public debt in a way is something that is not that relevant to us because the government can keep printing money. So if they are in trouble, they simply print more money, and I know it brings other problems, but from the point of view of short-term situations, the government is in trouble, they just print more money. As a private sector, they can't do that. They don't have that flexibility to simply just generate new cash. So you either earn it or you borrow it. Okay, and if you borrow it, and like we've seen, for example, in Japan, in the 80s, where the real estate have been, blown up to such a huge proportion where the prices were completely unreasonable. What happens when you can't get the returns on the capital that you borrowed, and it costs you more to to keep your business afloat than what you're getting as a return. Obviously, it's not a situation that can keep going in the long term, and so you see that countries like Spain is massive deleveraging because basically that's the way they finance the accession to the EU, and they had to, this is what basically caused the collapse of the house market in Spain. I mean, if some of you have a house in Spain, for example, an apartment or a villa or something, that will realize, that the prices of real estate in Spain and in Italy and in Greece have actually gone down quite sharply. Because simply, it's become like too expensive to maintain them, especially now, as interest rates are starting to go up. So if you add the bad demographic, the stagnant productivity, and lots of government debt, it adds up to a lower potential growth. Now, if you can imagine that the higher the private sector leverage, and we can see now which countries are more leveraged. And in the United States, historically, have been not as leveraged as other countries. But then they got the dollar, obviously, that does some of the donkey's work for them. But the higher the private sector leverage, the lower interest rates must be to keep the system going and growing and being healthy. Okay, so this is the reason why even a reasonable, actually a little bit over the equilibrium rate, plunges the countries that need to apply higher interest rates into then a period of recession or slower growth. So can you see here? This is in this chart. This shows from 1997 the real yields. So once inflation has been stripped out, minus the rate of equilibrium. Okay, and we can see the kind of the three historical times when these rates have been above the rate of equilibrium, which have been like in 98, 2000, with the great financial crisis of 2008, and right now. Okay, so if you can see, the periods of growth have been when you see these lines being below zero. Okay, it means that the real interest rates are negative. Okay, so it actually costs you money to invest money in the, to leave money in the bank, even if you received, let's say that you received decent interest rates, which you don't at the moment, but even if you received an interest rate from your bank, your money will lose value by sitting there, okay, or in a low interest paying bond or something like this. So in a way, when a situation is like this, you are forced to employ your money somewhere else. And so this is why the stock market grows, because people think, well, I'm not getting anything by leaving the money in the bank, so I might as well invest in something else that can provide me a return. Okay, and this is the reason why, although the economic situation was deteriorating, you can see why we had the growth in the past couple of years, because the real interest rates had gone really, really negative to almost like minus 2%, and this is how much it was costing you to just have your money sitting in a bank. Okay, because even if you maybe investing in bonds and you might have got returns of 4 or 5%, but then inflation being 7-8%, it means that you're losing purchasing power every year. And so when we tighten too much, and so the worry is that now we are levels that are historically almost at the highest point it's ever been. Okay, but they're still talking hardball here. So think, we want to tighten even more than this. So we're in a situation where inflation is going down, interest rates are going up. That means that the differential is getting larger. So generally, whenever that happens, then something breaks. And especially, if you see this, so this is the same chart I had, before, and this is the US real growth. Okay, so if you can see here, we were in a situation almost like a recessionary situation in both 2015-16 and 2018-19. But the reason why we have we didn't go into a real hard time is because at those times we had the real interest rates below the rate of equilibrium. Okay, so basically there was a loosening of monetary policy that supported growth. Now, though, what happens if we have the tightening and at the same time we tighten where there's weak growth? Okay, so there's only one way you're going from here, and at the moment, although the analysts keep expecting a 20% growth in earnings per shares next year, I personally think that this is unrealistic considering the situation that we're seeing right now. So, if you're thinking that in the near future, these rates, to be able to survive and grow, unless we want to go into a period of really deflationary where everything goes down, there is no growth in the economy, these rates will need to go back to to halve pretty much from the current situation. Okay, so if we expect the rates to go down by half for as a long-term strategy, then at the moment you're thinking rates are paying in bonds, in other products are pretty much double what they would be within 18 months to 2 years. So it's very difficult at the moment to support risk assets within this economic environment. So the kind of idea for the near future is looking at specific growth projects that have got very good potential, because that project in particular is very exciting, but not because the whole market will keep growing at a rate of 15% per year as we've seen in the last 10 years. That is not likely to happen in the next couple of years. So we need to be careful about investing strategies. I mean, I keep saying, I've told you for the past 2 or 3 months now. At the moment, the one strategy that looks attractive is bond, buying bonds, because these interest rates are not going to last at this level for the long term. And as the interest rates go down, the price of the bonds will actually go up. Okay, so not only would you be receiving, let's say if you're investing in US dollars, not only will you'll be receiving 5% plus for just holding dollars, but at the same time, those bonds that you purchase maybe at 99.8 cents to the dollar would be worth more, and the price will go above 100 if once the interest rates starts going down. Okay. Now, that's enough for the thing. I just tell you the 3 things that can affect this, by the way. As one of them is obviously there is a lag, as I said, of 12 to 24 months from when we entered this cycle, which we did in June of 2022. So we're now 14 months into this. Okay, so it could take up to another 8 months to actually hit a recession, or a much slower growth than we have at the moment. And part of this will be determined as well by the refinancing needs of the private sector. Okay, because again, having had very, very low interest rates for a long time, many companies and privates have financed their mortgages, have financed their the loans for their business before the interest rates started going up. So at the moment, that will not affect them, the rise in interest rate, until they need to refinance. Okay, so is expected a big wave of refinancing at the moment is expecting, to hit towards the beginning of next year. So that's probably when some of these things are going to be felt more in the economy. And the third aspect is always remember that the effect of tightening into weak growth will just push the growth even lower into then from where we are now. That's pretty much, like, I'm not saying stagnant, but close to stagnant into negative territory. Okay, let me just exit this. Going back to the calendar. Now, the exciting news are going into crypto, and see what happened to Bitcoin. Okay, so what happened on Tuesday, the 29th of August? To cause a 6.5% jump in price in an hour. So these are 1 hour candle. So we had 6.5% in an hour, and if you look at in 3 hours, we went up to about 8%. Okay, so what happened there on Tuesday? It was that there was an announcement of a result of a opinion given by the court in the case against Grayscale. Now, Grayscale is applying to transform the Bitcoin fund in a Bitcoin spot ETF, and the court case was the SEC had been ruled in a different way towards products that are pretty much are very similar, because the Grayscale already has a futures ETF. And this is kind of what the court saying in that case. They said the denial of Grayscale proposal was arbitrary and capricious because the commission failed to explain its different treatment of similar product. So therefore, they have granted a Grayscale petition, and now the SEC has the next 45 days to basically ask for another hearing. So basically, to apply to appeal this judgment, and after the 45 days, if not contested, this ruling would become final. Okay, so in particular, this is as well, the court addressed the SEC treatment of spot Bitcoin ETFs and Bitcoin future ETFs in the opinion. So they were saying Grayscale was showing in the application that the proposed Bitcoin ETF that there was similar, it was similar to already approved Bitcoin futures ETF in both the underlying assets and the surveillance sharing agreements. So it should have the same likelihood of detecting fraudulent or manipulative conduct in the market for Bitcoin. Okay, so this is what the SEC is saying in its rejection of many Bitcoin ETFs. They were not convinced that the spot Bitcoin couldn't be, manipulated. The price of Bitcoin couldn't be manipulated fraudulently. But they've shown that, not just Grayscale, but also other findings that they have, the same systems in place. That and it does not make sense to apply different rules to products that are very similar. So this is what the SEC has said. Is that they're always citing concerns over fraud and manipulation. Okay, now the first Bitcoin futures ETF was approved in 2021, but they said that the futures products are harder to manipulate as the market is based on future prices from the Chicago Mercantile Exchange, which is regulated by the Commodity Futures Trading Commission. Now, what is likely to happen is that unless they can they can change the game, or they can appeal this successfully, there's not so much that is that not just Grayscale, but all the other application, if this goes through, all the other spot Bitcoin ETFs will need to be approved as well, because what would happen as well is that basically the SEC will keep losing in court, so it doesn't put them in a positive light to keep being losing cases like this in court. So what the agency can do, and they can either approve the conversion of GBTC into an ETF, or they can deny for some other reason. Okay, that remains to be seen. The other thing they could do, they could close all the future-based Bitcoin ETFs, but that's unlikely. They just also approved a new one as well in June. So it is not likely to happen. So that was, where are we? So let me just move this. So this was what happened on Tuesday, and what was expected here. So this is what happened yesterday instead. So we had pretty much a similar drop in prices that brought us back to the same level as we were at before the announcement. Now, what happens here is that there was the SEC again delayed the approval or rejection of the BlackRock ETF. Okay, so again, they have delayed it for another 45 days. So this ETF was presented in June, and they have really up to a year to give their final decision. So they can keep delaying it as much as they want, really. But it is actually, it makes sense, because they have 45 days to appeal the case against Grayscale, and this is 45 days delayed the decision on this as well. So at the moment, basically the market is saying, yes, they have one opinion, but there is still a good chance that the SEC will appeal the decision. So again, it's back in the courts. Okay, and this is the reason why we had a big jump, thinking, okay, everything is like green light to a spot Bitcoin ETF, and then we're saying here, no, actually it's not. So it's still holding. So we'll wait to see it. We'll wait to hear what happens. And this has been the market all along. You see how price has been pretty much doing nothing. It's because the market has been dominated by these news, and they're expecting to see which way the wind will blow. Because again, I remind you that if a spot Bitcoin ETF is approved, it means pretty much that Bitcoin will become an institutional level asset. Okay, why? Because anybody living in the US or with a US brokerage account will be able to buy Bitcoin directly in a regulated environment. Okay, so because these the ETFs, you can buy them in the stock market. So the same way that you can buy any stock and shares, you can buy an ETF as well. So you don't need to have a technically difficult operation to buy Bitcoin, and you have to put your cash into an exchange, and then with exchange buy Bitcoin and so on. You can simply transfer it from your wallet, and even with your pension wallets and so on, you can then buy Bitcoin directly through your bank, through your broker. You don't need, it makes it a lot easier to invest in Bitcoin, and as a result of the Bitcoin as well in cryptocurrency. So this would be a big thing when it happens, and you can get an idea here by what the market thinks of any such approval. Kind of jumps of 10% in prices are quite normal. We just something that is not definitive like what we have right now. So we'll see what what the courts bring us in the next few months. So, a word of caution. We are in a decentralized world here, and this I wanted to show you because this is the easiest way to lose all your cryptos. Okay, so this is a YouTuber that was doing a session like I'm doing right now with you, and on his screen, obviously, he accidentally displayed his seed phrase. Okay, so within minutes, he lost everything he had in his wallet. So he had about $60,000, and he had several NFTs. So he lost everything within minutes, because if you show somebody your seed phrase, you are giving them access to your wallet. So remember, this is the easiest way of losing your money. So if you have any problems, and I've seen this on Discord many times, somebody that was having a specific problem and somebody else from maybe a Discord help, being, parading as an official helper for that particular Discord group, will ask you to maybe go to this website and enter your seed phrase. Okay, now never, ever, ever, ever type in your seed phrase because anybody has requested you to. You should never be required to type in your seed phrase unless it's for your own use. Maybe you're changing computers and you want to install your wallet on a separate computer. That's the only time you should ever use your seed phrase. Okay, but never because you're providing the seed phrase to a third party, because that basically it's almost like you're giving somebody full access to your bank account. Okay, so you're giving them the login, the password that they need to transfer money out of your account. So never do it. Okay, this is a good example of what happens and how quickly something like this can happen. And by the way, exactly this, not because a YouTuber, but it was somebody that's asking for help, happened exactly in our community. So luckily they didn't lose as much money as this, but everything was gone from their account overnight, because they got into like a helpline and they asked them to to put in their seed phrase on this particular website, and then everything was gone from the account. Okay, so just don't do it. Okay, so that's again talking about the Grayscale case. And this is the reason why I said Bitcoin prices has gone down. Okay, the SEC defers the ruling on BlackRock and Fidelity Bitcoin ETFs. Now these are massive funds. Okay, both BlackRock and Fidelity, and between them, I mean, they will have close to 1,000 ETF between them. So they're not, they don't do these things lightly. I mean, BlackRock has only had one filing rejected out of almost like 600 ETF proposal that they put forward to the SEC. So again, when they take that step, as I say, there's a very, very good chance that this will go forward. Okay, but again, is a dampener on everybody's excitement, because I'm thinking, well, yes, maybe it will be approved, but not quite now. Okay, maybe in a few weeks. So at the moment, the goalposts have been shifted forward about 45 days from, just write it down. So this is the 29th of August, just count 45 days from now. Okay, so this is when the SEC must appeal the case against Grayscale. Now, if then they appeal, the appeal will take a little bit of time as well to go through. So it will be 45 plus whatever the court takes. Okay, but generally they are quite quick in these decisions. Okay. Now this is another beating that basically the SEC got, because they were again, they took Uniswap. So it wasn't, sorry, well, this wasn't SEC, but it was a class action against Uniswap. And this recent ruling, it sparked excitement because it could apply also to the case against Coinbase. So this ruling said the Uniswap developers could not be held liable for how people use their platform. And also part of the demand, it was asking, to apply security laws. They're saying that basically the Uniswap token was an unregistered security, but the judge was saying that the Bitcoin and Ethereum are not for the SEC on admission are now commodities, but the courts were yet to decide on a classification of ERC20 tokens and other tokens, other crypto tokens. And she was unwilling to stretch security laws to apply to the case, arguing that this should be the job of Congress. Was saying, well, don't ask me if these tokens are security or not. This is a decision that must be taken by the Congress. And this is what we talked about for ages. So thinking, you know, the SEC cannot just, what's it called? They need to apply the existing laws. They cannot just make the laws themselves. And at the moment, those laws are not there. And the Congress really needs to rule and needs to set some rules then that would be applied. And this obviously will have big implications because crypto, as I say, it's a multi-trillion industry at the moment. And, being too restrictive against cryptocurrencies might push a lot of the business away from the US. In the meantime, what is happening in the real world? Okay, this is again is another. There's quite a few big announcements this week. Now, SWIFT, SWIFT is the global payment system, basically messaging payment system that banks use to transfer money to each other. I've been conducting experiments with Chainlink to facilitate global tokenized asset transfers. Okay, and this is particularly because of kind of things would happen on the blockchain, but obviously banks need to be sure that a transaction across blockchains can happen seamlessly. So look at the consortium of financial institutions that was involved in this. Okay, ANZ, BNP Paribas, Bank of New York Mellon, Citibank, Clearstream, Euroclear, Lloyds, the Swiss Six Digital Exchange, and the Depository Trust and Clearing Corporation. These are big industry players. Okay, so does it tell you, whatever the governments decide, does it tell you the blockchain is bringing value and things can be done differently by using blockchain? So this is, obviously SWIFT in a way is the network that's got most to lose from, a world where, Stellar and XRP are the places where people, institutions move their money across borders. So they are trying to say, well, if you can beat them, join them. So have a system where they can keep some sort of control. Now, the other thing I want to tell you is that, if you want to invest in cryptocurrencies, what do you look at? What kind of tokens, what type of projects more than tokens will you look at? And this is a big word, okay? Cross-chain interoperability protocol, CIP. Okay, and so this is one of the biggest things in crypto right now, because we haven't got to a Wi-Fi moment yet in crypto. So if you have any device, maybe an iPhone, maybe a Samsung, maybe a Google phone, you can go anywhere in the world and connect to Wi-Fi because it's a common standard. Okay, now this doesn't happen in crypto because if you have tokens in Ethereum, you can't use them in Cardano or somewhere else and so on. So the networks at the moment, they don't really talk to each other. Okay, so different blockchains are just different currencies. It's very difficult to move assets between one blockchain and another. So projects that look at this cross-chain interoperability are future, from the point of view of the future, very, very interesting for the blockchain industry as a whole. So which projects are doing that? Anybody has any idea? Anybody can mention some blockchains that concentrates on cross-chain interoperability? Come on, guys, we've been talking about this for 2 years. You should have some names now. Anybody can put it in the chat? Or
Ethereum?
No, not at all. Not at all. Ethereum is probably one of the biggest culprits of these problems. No? Anybody else? There is a board for Cardano from America. Cardano is doing some work with this, but it's not their main focus. Okay, the main projects at the moment in the cross-chain interoperability are Polkadot and Cosmos. Okay, those are the two of the big projects, are the ones that have staked pretty much everything into cross-chain interoperability. Other projects are doing things, and Cardano and Ethereum, they all have partial solutions at the moment to this, but not completely. Carol, you have I can see you raised your hand. You want to?
Yeah. I just need you to restate the second project. You said Polkadot. I just couldn't catch the other one.
Cosmos.
Cosmos. Thank you.
Their token is Atom, ATOM. Okay. So those are the two projects that basically talk about interoperability, and this is why I've been telling you for ages as well that one of the projects, future-based project that I personally kind of have in my portfolio is Polkadot for that reason, and it's not like to make a quick buck within 6 months or whatever, but I'm looking at 5 to 10 years down the line when this technology will be everywhere in everything that we do. Okay, from management of money, from banking to voting, to take part in our communities. A lot of this will be done on the blockchain. Okay, and when that happens, interoperability will be very, very important. Okay, so there are other projects as well, but even the new one that's coming out, like Layered Zero, is talking about this. But let's talk about the project that have already been working at this for several years, like like Cosmos and Polkadot. Okay. Other things, and I'll quickly go through this. The UK now has joined the reporting requirements of crypto transactions. So, and this is across Europe and about 200 different jurisdictions where transaction over a certain level, you will need to provide the originating party's name, address, account number, transaction identifier, personal document number, and customer identification number, etc., including place of birth and so on. So this will be for transactions that will, are from a let's say Binance or Kraken or another provider. They will need to provide this information if you make transactions above a certain level. In the UK, this is £1,000. In the US, is $3,000. Different countries will have different levels. But the one thing, the one thing that is kind of difficult to understand is that obviously this cannot be applied. So this is mainly what they're saying is for for fraud and for terrorist transactions. But the one thing that they can't apply this to is decentralized wallets. Okay. So, and this is, what do you think? I mean, if you get somebody there's a terrorist transaction, will they put their transaction through Coinbase, or will you have it through a decentralized wallet? I mean, it wouldn't make sense, would it? So, in a sense, I don't know what this will achieve. I mean, the one thing is that they're applying to this is not new, by the way. It's just they're applying to digital assets the same rule that they already applied to cash. Okay, so but I don't think it will make any difference to actually people that really want to use this for those kind of activities. Other things as well. Twitter, now called X, obviously just acquired a crypto license, giving crypto license. I don't care about Doge, but it might give actually Doge a reason for actually existing after all. But basically, they could use they could integrate crypto payments into the platform. Okay, so they have now got these things. So they keep, again, you keep seeing little bits of infrastructure being put in place to use cryptocurrencies. Okay, and there are so many different things. I don't think we managed to go through it all, but we have announcement with MasterCard, the partners with Nexo, Theta. There's a kind of a video decentralized video transmission that was working together with Google, which is the owner, obviously, of the biggest competitor, which is YouTube. Ethereum smartphone based on smart contracts based on the Google phone, but the operating system now is it's based on Ethereum, and has launched now. They sold the first 50 or so a smartphone as ETHOS operating system. Okay, short for the Ethereum operating system. So first, it will be a device based on Ethereum programming, which I wouldn't jump to buy, to be honest with you, but it is because there have been so many problems in Ethereum. But again, it's something that will link everything into one device. Okay, so where else? So it includes tools for payments, messaging, Ethereum virtual machines, and supports also the layer 2 scaling networks as well. So to buy these smartphones, you have to purchase an NFT, which then you could burn or destroy to reserve the phone. Okay. And this is actually another thing. This is an interview with Charles Hoskinson, the founder of Cardano, that is talking about in which way Cardano is different from other platforms, like including Bitcoin and Ethereum. And a lot of it revolves about the voting system, okay? And the fact that what is being really pushed into this iteration of Cardano is change from a top-down hierarchy to a where the power is away from the people, from the users, to empowering every users to make decision on the network. So this is different from what happened in other network like Ethereum, for example. The Cardano's target is to achieve full decentralization, okay, to operate through user consensus rather than being controlled by a single party. Now, to show you also the stability of the Cardano network, the network hasn't had any downtime since 2017. Compare this to, Solana, that has been very, public, and sometimes they've just turned off the switch, and even Ethereum and most of the other blockchains have had downtime. This doesn't happen because of the high decentralization of Cardano with 3,200 stake pools. And remember, we have Jonathan in our community. He's a stake pool operator, so he's one of these 3,200 stake pools. But this shows you the amount of decentralization in the network. So what it envisage in the future is that Cardano will be a platform that will have voting, money, and every dimension and aspect of our digital lives on the blockchain. So this is what Cardano has been working on, and although it's it's a slower trajectory than many other cryptocurrencies, let's remember that what they are putting in place is something that could run pretty much whole countries, on the blockchain. And to have something like this and to be safe and secure, you need to put certain things in place. They are not quick and not fast. And this is why Cardano has over 100 scientific papers supporting the different aspects of their network, and can be used by anybody else, by the way. So they're actually changing the game, not just for their own use, but for the cryptocurrency industry as a whole. So again, I've been talking to you about Cardano and Polkadot, are probably two of my favorite projects. But this is the kind of research that you should do, right? And what is it that can make me lots of money in the next 2 months? This is what is that can really change the way we live in the next 4, 5, 10 years. And this is what actually gets me going more than fast immediate results. Well, those are interesting as well, obviously, but it's not everything that we chase. Okay, so we have come to the last 5 minutes. So any questions? No? Nobody has any burning desires to find something out about crypto or anything else? Okay, all right then. If you don't have anything extra need to speak, I'll just remind you. I mean, I don't have Jonathan's link. He's here and he posts the link himself. But remember, the Jonathan session is every Friday when this finishes. So it starts at 9:30. So this.
Luca.
Yeah.
Jonathan's away.
Sorry. Oh, Jonathan's away. That's why. Oh, I wonder.
Yeah.
I wonder why. Okay, so probably won't do a session today then. All right, fantastic. Thank you for letting me know. But for future references, once he's back, he runs a Cardano crypto session every Friday at 9:30. So I would highly encourage you to follow that if you want to find out not just which token is better to buy, but which projects, what inside the community, where is the interest going, what are people working on, because those are the things that in the end will determine if we use cryptocurrency or not so much what's the token worth, but can I use it for anything in my life that would improve the way I do things, about many different things. Okay, and we have examples of blockchain being used from anything, including like tracing the origin of a bottle of wine. I'm talking about something that can be used every day. Or for Italy, being Italian, the origin of olive oil. This technology now is used in many Italian olive oil bottles. So right on the so you can point your phone to the olive oil and know where all the single steps that bottle has gone through, from where they collected the olives to where it's being crushed, where it's being bottled, and so on. So these are realities of things that the blockchain can be used for every day. And I would encourage you to go and investigate things and other projects because this is really interesting. Just the last thing, okay, before I end everything, there's one project that I didn't show, which is interesting. Where are we? This one, for example, as smart batteries, there's a intelligent way of store and release energy based on this intelligent technology. Now, there's a way that there's a particular way that using a tokenization, this company is making it possible to investors to invest in the batteries themselves, so they can have they can see everything that goes on in the battery once they got an investment, once they got the investment, so they can check how well the network is working and what benefit actually is bringing to the ecosystem. This kind of technology could be huge for renewable energy, because the problem is that renewable energy sometimes cannot be controlled. The amount of wind, the amount of sunshine, and how much energy comes out of that varies all the time. Having intelligent batteries to that will allow all that energy to be stored and being used when needed, instead of having to be sent away to the network straight away. So when the network doesn't need it, obviously the energy goes wasted. So this could be a vast improvement, and it's a way of people getting involved in this technology. If you're interested, I will copy and paste this. So go and find, because we have now run out of time. Copy this link in the chat if you're interested, and go and read the article, which is, again, I'm not endorsing it or anything. I thought that's simply something I read this morning. I thought that sounds interesting. So don't tell me if it goes badly. I'm nothing to do with that investments. I've not invested in it myself. It's something that just came to my attention. But if you are interested, then go and have a look at it and follow it up yourself. But again, this is no investment advice, all right? Okay, guys. So I will wish you all a nice weekend. Remember that I'm not here for the next 2 weeks, so I will be back then. So today is the 1st, 8th, 15th, the 22nd of September. Okay, and starting again as normal. All right. So goodbye, everyone. Have a great weekend, and I'll see you back at the end of September.
Have a nice holiday, Luca.
Thank you. Thanks, Eric. Bye.
Nice weekend.